Opendoor, another iBuyer coming out and with mass layoffs. And these iBuyers continue to struggle right now. And so a recent report says that Opendoor lays off 22% of its workforce in the latest round of cuts. So in total, here's what the report said. In total, the company cut 560 positions as of their last layoff, their last go about. And so they're attributing this obviously to a slower real estate market. And here's what they had to say. So we're taking these actions now to become aligned or to be aligned with our operational cost with the anticipated near-term market opportunity while maintaining our critical technology investment that will continue to drive the business long term. Now, Opendoor, they didn't specify how many employees they still have, but 560 is about 22% of their 2,500 people. So it appears that they've got under 2,000 workers still working at the company. Now, here's the thing. What I don't understand is what all the fuss is about with these companies at all, because iBuying is nothing new. It's simply a wholesale methodology. And I'm going to share my screen in just a second. I want you guys to look at something that I think most real estate agents have never looked at before. Because here's in coaching conversations over the past 2-3 years, I seem to be having conversations with agents that were so concerned with companies like these coming into the market, eating up market share, and agents thinking that it's tough to compete with these offers because the value proposition that an iBuyer brings to the market, what they're hanging their hat on, of course, is the ease of transaction. Hey, you don't have to go through the headache of listing your property with a real estate agent. You don't have to go through the showings and all that stuff. We'll just give you an offer straight up. Well, there's a lot more that goes into that. And this is why I've always told the real estate agents that I coach two things. Number one is that these companies always appear when we have a hot seller's market. When property values are soaring through the roof, you see companies like this coming up everywhere. A lot of these companies tried to get into this business model. Zillow tried it, they got out. Redfin tried it, they got out. Opendoor, OfferPad, you name it, a bunch of people got into this business, lost their asses on this business, and quickly got out of the business. And so what I've told real estate agents for years is that, listen, as markets, real estate is cyclical. As the real estate market gets hot, you'll see these things pop up. As soon as the market shifts, you'll see them go away. And that is exactly what we're starting to see. And the second thing that I've told real estate agents is no matter what model comes into the marketplace, it isn't this all or nothing. What I mean by that is this. There's different segments of the marketplace. There's not one model that fits all. There's not one model that every single home seller is going to go with. Every model will have a certain market share. The flat fee MLS listing that has a certain market share, a certain percentage of home sellers might go the iBuyer route because they want it to potentially be easier. The vast majority of the country is still listing and selling their house with a full service real estate agent, such as yourself. The vast majority. And so to fear something that has such little market penetration probably isn't worth it. Now, furthermore, I want to show you something that I think a lot of people aren't aware of. And I'm going to share my screen with you guys now. So if you're listening to this on the podcast, I'll talk through this. But when you dig a little deeper, I'm on Opendoor's website right now. And they've got this visual that kind of says, okay, you can either option A, sell it to us directly, sell your house directly to us at Opendoor, or list it, and they're kind of comparing the two. Now, if you even look at this, here's what it says. The example they give is a $250,000 sales price. The service charge to sell a house to Opendoor direct is 5% of the sales price right off the get-go. The estimated closing cost, 1%. Now, here's the key thing. On this website, which I find interesting, right at the top, it says transparent pricing, no hidden fees, which I think is super misleading to the consumer. And here's why. This is the other reason why real estate agents, I just don't think that this should ever be of a concern. If it ever was, maybe this will help you. But when you look at their website, it costs the seller 5% right off the top to sell a house to Opendoor. Furthermore, estimated seller concessions doesn't show anything. First off, we're in a market right now where seller concessions is very difficult to get. However, if you click on this button, it says buyers may ask you to cover their costs to close the deal. Not right now. However, look what it says. When you sell to Opendoor, we only ask for repair cost. Well, why is that such a big deal? Well, here's what they're saying. We charge you 5%, and oh, by the way, we're going to ask for any type of repair cost that we find as a result of some type of due diligence or some type of an inspection. So now, and it said, let's see, I just want to, I saw this somewhere on their website talking about the fact that most of the time they're asking for money from these sellers to repair the property. So not only are their offers potentially lower than they can get on the open market, they're charging 5% to do it. Not only that, they're going to charge the seller repairs after they've accepted their offer. And at that point, the seller's like, geez, I'm already deep into this thing. I don't want to start all over again. They cough up even more money. So it's not even a cost savings to sell direct to a company like this based on their website. Two, you probably, and it says this right on their website, the estimated net proceeds is less than what they're showing you could get listing it with a full service agent on the open market. So what is the value offer to the consumer really? One other thing that I want to point out, I'm going to share my screen again. It says this in fine print at the bottom of their website. Service charges are subject to change and historically have been as high as 14%. So the 5% advertised, it seems like they're saying that's maybe average, but it's subject to change. And in fact, in the past, they have gone up as high as 14%. So sellers may get a lower offer, more fees to sell it direct to Opendoor. So my question to myself, maybe you guys can help me. I don't know what I'm missing. Maybe I am missing something. It's like, I can't believe that many people would choose that route versus listing it on the open market. Even though listing it on the open market, you could argue that it might be more difficult or more hoops to jump through. If I just believe, and I could be totally wrong, I'm curious to kind of get your guys' thoughts, but I just believe if we were to interview 100 homeowners who were going to sell their house this year, and you ask them this simple question, you have two different options to sell your house. One option would be easier, but you net less money. One was harder, but you net more money. I just believe that most sellers would choose the latter, that most of them would say, listen, I'd rather get more money, even if it means I got to do a little bit more work and I've got to show the property for another week or two and deal with that. I'd rather do that if it meant that I was going to get more money. I think it would be very, very rare to find a seller that was in such desperate situation where they say, yeah, I'm fine getting $20,000, $30,000 less in my pocket if it's easier. How do I know that? Because I talk to sellers every single day, and so do you, that argue quite the opposite. I want more for my house. I'm not accepting that. I don't care. I'll sit on the market forever. I am not giving my house away. I have very rarely, if ever, have talked to the seller who's told me, hey, I don't really care what it sells for. Sell it for as low as you want, as long as you sell it as fast as possible. I have rarely, maybe if ever, have had a seller tell me that. So I don't even understand the value of this offer anyways. Now, these companies, I believe, are in trouble. I'm going to share my screen again. And if we look at the stock prices, let's look at Opendoor first. If I look at the last 5 years, I mean, this thing has just gotten absolutely hammered. Since the peak of 2021, which, oh, by the way, is when we saw the height of the real estate market, housing market, like I told you guys before, these companies do really well when the market does really well. Look at what it's done since. It's done nothing but just go down, 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 down. Investors are leaving these companies left and right. Look at their biggest competitor, OfferPad. If we look at their 5-year stock price, this at the height of the market in September of 2021, it was at $13. It was trading at $13 a share. This thing's down to 50 cents a share. And so it seems like a new report comes out almost every single day on one of these companies, either laying people off, struggling to make it. And we're going to find out. Regardless of what happens, however, I don't believe that these companies are a threat to real estate agents and what we do based on everything I just told you. And I don't know that they'll make it long term, but even if they do, because it's such a small segment of the market that these companies are appealing to anyways, I just don't think it's something that we need to concern ourselves with.